Stavros Tousios for M4Markets. Today I wanted to go back on the euro dollar and also Nasdaq ahead of the CPI report. Very important report today, guys. Euro dollar has returned back within this base channel that started back on last September, and we have been actually getting signals for a bearish price action all the time on the RSI at least. Now, if you remember as well, last time we did reveal a potential triangle pattern, and triangles are not allowed to have swing lows of the preceding wave. Actually, the current wave's like surpassing the preceding wave. That means that this 10941 is also the limit for this particular case. So we are at an alarming sort of stage where it's either that this is a double bottom and we're going to continue higher from here, or we're going to break lower, invalidating this pattern, and probably this would then suggest that this could turn into an actual flat pattern instead, which again has the characteristics of a sideways market, but with false breaks to the top and to the bottom in this particular case as well. But it would indeed be a correction, suggesting that even in the short term, if we go down even to 108 or lower, supposedly this is going to continue eventually higher. Now on the 1 hour, here's what we see. We see pretty much a continuation to the downside, which means or suggests that even if we do go higher, the 38 or the 50 are supposed to hold. We are, of course, very close to 110 as well, and it is a big psychological level that we haven't really managed to break like successfully, because we did go to around 111, it did, which we failed, but you see, we are actually staying here around this territory for quite a while. The most supported scenario is for further downside towards the 109, okay, invalidated the triangle, or if the CPI is actually better than expected, then that would allow the dollar to come down and euro dollar to go up, validating the triangle in the opposite, of course, scenario. And I think in this time around, this is quite an important event to watch for short and medium term price action for the euro dollar. Now, when it comes to Nasdaq, we've talked about that last time. I think we were talking about this retest over here, and we have actually continued to move higher. We remain in an accelerated trend versus the trend that we started to the upside from the low of October. And as we can see, we have come and done 138 and above. So the next level to the upside, really, from a technical trend perspective, is around the 1360. Okay. Let's also forget that kind of also looks like a flag pattern here, a 5-wave move, a correction, and that either is going to be a double top and we're going to go down in 5 waves and from there probably further up, or this is going to be the 5 and then this is just the one of the next 5-wave move. We're going to see further upside. Now here's the thing, we've had swing low, higher swing low, and as long as we are above pretty much the 13K, okay, this remains biased to the upside. However, we do have this warning signal here on the RSI, guys, okay, and it's on the 4 hours, so it can be quite strong. It would suggest downside. It does suggest downside with, of course, the 1293, 1270 and 1250 or so, all of them in focus. Down on the 1 hour, you see, we see the clear 5-wave leg to the upside over here, okay, and a correction. And here again we see kind of another clear 5-wave move up. Okay, so if this is supposed to be just a correction, it means that it would naturally have gone up to around the 1350, because typically this the first wave and the second wave have the same length. So by doing that 61.8, it means that this correction could be bought at anywhere between the 38 and 61.8, which again, the CPI, of course, a critical component in the direction for Nasdaq. So 1360, and as I said again, you know, as long as we're above the 13K, conviction is there, then that means that there is bias remains to the upside.